Alright, let's talk about Palantir's valuation. In today's video, I want to go over some growth scenarios with you, projecting out until 2030, the revenue that Palantir will have, and then I will talk about some potential very bullish triggers for revenue, and we will use common sense and try to see if today's share price is justified or not. So please let me know your opinion regarding this in the comments below, and we can help each other out with regards to this company. Hey, I'm Andreas. I've been investing for over 10 years, and in today's video let's talk about the Palantir valuation. Now, full disclosure, I have over 1,000 Palantir shares. It's been almost a 10 bagger for me, so there's potentially a risk that I have some rose-tinted glasses with regards to this, that I see growth triggers that might not be there. So if you have a negative sentiment regarding any of the growth triggers that I bring up, please let me know in the comments below, as critical opinions are always welcome here. Alright, let's go over the layout here. On screen right now, you can see the revenue in billions for Palantir for the full year here of 2024. And then I project out a scenario of 20% growth, a scenario of 30% growth, 40% for the year 2025, 26, as you can see, all the way up until 2030. Common formula used in the Google Sheet here to do this. Alright, so with regards to Palantir's own prediction, they predict slightly above 30% revenue growth for 2025. So 3.74 billions for the full year that we're currently in. And as you can see here for 2025, with 30% growth, that would be 3.73 billions. So slightly above that middle scenario is what management of Palantir is predicting. Although fourth quarter, as we remember, extremely strong, almost 40% revenue growth. I've talked about that in the past, that was something that I really wanted to see from the company, and that the 20% that they had back then was something that really worried me, and if it continued, that would have been something that made me want to sell the stock. However, they recovered strongly, they delivered on growth, and stock price predictably followed along. Right now, Palantir has a market cap of 264 billion. Right? So I've written this up, and this will be relevant when we look at price to sales. Because why do we talk about price to sales there? I see some people like to talk about price to earnings with regards to Palantir. I think that this measurement does not fit very well, just like looking at earnings instead of funds from operations from a REIT. This company is a growth company. It has recently turned profitable, and price to earnings is going to be very skewed. Just like for Nvidia in the beginning. Huge PE, and then it came down. Same for Tesla. And if you try to use common sense value investing principles on growth stocks, well, then you're going to miss out on a lot of gains, and you're going to miss out on big future winners when they are in the early stages. They require a different tool set, and the rule of 40 is one of those. If you add together margins and revenue growth rate, and that's higher than 40, well, then you are in an amazing position. And with adjusted margins, adjusted operational margins was 45% for Palantir. Adjusted, taking away stock compensation, a special one-time stock compensation as a result of the increasing stock price. So this is very important. I've taken a note of that here as well. Operating profit 45% if we adjust away from stock compensation. All right, so let's take a look at the predictions here. We can see I've made a nice graph if we scroll down a little bit. So this is in billions. And we can see that if they grow at 20%, we are at 4 billion in 2026, we are at 5 in 2027, then 6, then 7, then 9. It's quite a slow growth. $9 billion in sales for the full year of 2030. And imagine that stock price doesn't change at all from today's level of 264 billion. Well, then in terms of price to sales here, we're gonna be above 25. You can see the blue line here for the 2030 graph, and you can see the full number here as well for 2030. That's gonna be 30.81 in price to sales for 2030. So is that reasonable? No, then you're gonna be in a very bad position, in my opinion, as an investor. Even if operating profit continues to increase, we see a trend with the profitability increasing. And as a software company, I think that they eventually are gonna be able to settle closer to 80%, somewhere in that range. That's the hope that I have as an investor in Palantir. All right, what about some other scenarios here? The middle scenario of 30%. Then we see 4 billion for 2025. We model it out. We see 6 billion, 27, and in 2030, 11 billion. And that would give us a price to sales here, in this case, slightly below 25. Now, Nvidia has price to sales of about 50 with their strong growth, being the hardware platform for the AI revolution. So modeling this out, we see that there's still room for stock price to grow going forward, although they have to deliver. With 30%, it looks more reasonable, more in line with average S&P 500 performance, in my opinion. But let me know in the comments below if you disagree. However, with the 20% scenario, then the stock looks very, very expensive today indeed. And then in the final scenario here of 40% growth, well, if we take a look down here, we can see that, alright, then Palantir revenue is gonna be 16 billion. So quite the difference from the 20% scenario over time. This really, really makes a huge difference. And in terms of price to sales, it's gonna be a lot lower here as well. So with regards to future growth, we clearly see that they can't do the 21. But do you think that price is justified with 30% growth, or would you want to see 40%? Now, let's talk about the triggers here for growth. There were some things that caught my attention from the earnings call, and that was with regards to the sales cycle, the inbound sales cycle. Imagine that you're a seller at a company and they actually get inbound leads, and you're able to close those at 3 months, and they are huge deals. Now, I work in high complexity sales. I've done so many years, and I know that a sales cycle can take 6 to 9 months easily, sometimes even more than a year, if you count all the nurturing, waiting for a tech refresh in the stack, waiting for a license to expire, something like this. And the fact that Palantir has so short inbound sales cycles tells a story on its own, in my opinion. That tells me that there's high demand for the service. Just the fact that people are contacting the company, asking about the software, and that it's closing this quickly with the size of the deals that they have. You know, it's a high complexity, it's a large deal, and they're able to close it quite quickly. That's absolutely amazing in my opinion, and I think that that's a clear indication of potential high future growth. What about mid and small business? If you look in, for example, LinkedIn Sales Navigator and search for people working at Palantir, you will find that most are enterprise salespeople. They target government and large companies, and perhaps there is room for even more growth with modules targeting mid and small cap companies, although at the current stage of the company it doesn't make sense to target that market yet, but that's potentially an untapped market that could continue to accelerate growth even quicker. Alex Karp in interviews has mentioned them tapping into on-prem data lakes. Now this would be not a SAN, it would be a NAS, network attached storage for file data, where it's being fed with different edge locations data just into a massive pool of data, so to say. And being able to tap this for insights is something that could drive a lot of growth in the commercial sector. Trust me, I've sold a lot of Isilon, as it was called back then when I worked in Dell. It's called Power Scale today. A lot of companies using NASes like this to store their data, and they will use different software to try to get an edge with regards to the data that they have from the operation. For example, Splunk here uses some of those data lakes to redirect traffic if they see a storm coming or things like this. And if Palantir can do an even greater job here and is getting inbounds, well, then this is a potential growth trigger for revenue in the commercial sector. Brand attracting inbounds. Strong brand, they're getting a lot of media attention right now. Alex Karp is on the news, he's talking. CEOs also watch the news. It's not just you and me as investors. They see Palantir, they get this brand recognition. What's the value of this? Will this drive even more inbound leads? Only the future will tell. But in the future, a negative growth pointer, reducing scalability, just like Tesla, Nvidia. Eventually, when the company grows more, it's going to be more mature, it's going to be harder to grow. These 40% growth numbers, it's only going to be harder and harder and harder as the company grows. So 2030 is going to be a lot more difficult than 2025 to show these growth numbers. I mentioned it, but this is not related to revenue growth, but operating margin, I believe, will continue to grow, as we see with software companies being closer to 80%. We saw 45% here in the latest quarter if we adjust away the stock compensation. All right, so let me know your opinion in the comments below. Am I out on a bicycle with regards to this, or do you believe that there's some reason in these numbers? What growth do you want to see? Do you think the company is overvalued, undervalued right now? I'm keen to hear your opinion with regards to this. Alright, that's been it for this video, and as always, hope you guys make a ton of money, whatever investments you decide to make. Take care now, bye bye.